Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah, and the Talking Point today are the views of the management of VA Tech Wabag. They came out with numbers where you can argue that maybe the revenues were a touch below what the bullish estimates or the optimistic estimates were. On the operational front, on the order inflow front, things seem to be pretty kosher. The question to the management is, are things looking better as we enter a second half, which is arguably a busy season, but also a season which is marred, as I said this morning in the trade setup, by not necessarily sporadic, but fairly concurrent rises in COVID cases across the world. Mr. Rajneesh Chopra joins in, need no introduction really. Mr. Chopra, great having you. Hope all is safe.
Yeah, absolutely fine. And thank you so much, Neeraj, for having me on the show.
Now, the pleasure is ours. So, some of the quarter, you could argue that the revenue growth, while looking decent under the circumstances, maybe was a touch lower than what some of the bullish estimates were, but the order inflow looked pretty solid.
See, as far as revenue is concerned, I think we grew by almost 30%. And if you recall, even last year, although it was a COVID year, that is FY21, even in a COVID year, we ensured growth of our business. So it's not that we had a slump in the COVID year and then we have grown. So I think 30%, in my opinion, is a reasonable growth. It could have always been better. At the first quarter didn't impact us on COVID, which was more in India than overseas. Now, you mentioned about COVID impact overseas. I don't really see, much impact of COVID cases in geographies, maybe somewhere in Europe, somewhere in Russia, where we have our ongoing projects. Because by and large, for the sites, the governments have already decided their construction or EPC work is happening, what are going to be the norms to be followed. On the other hand, as far as O&M is concerned, I think right from the beginning, we never had any break because these are all under essential services. Now, looking forward, as you mentioned, I think definitely we look at it as a growth year, but we have been wary of giving any guidance in this particular year. But if we could, demonstrate growth in a COVID year, and in the first year, we have pretty decent numbers, whether it is top line, bottom line, or even the margin improvement. I think second half should definitely be much better than what we have demonstrated in the first half.
Maybe that's a bit of a soft guidance. The street has been wanting that, Mr. Chopra. How is it that VA Tech Wabag? And I understand it's very difficult times, but you believe that as things stand, with all the COVID restrictions in place, for businesses at large, maybe not for you, second half would be better than first half.
Certainly, yes.
Okay. Just talking about what was the mix between international and domestic in quarter two, or maybe first half, if you will. And again, I know you mentioned that some of your businesses or things fall under essential services, some of which has already been decided by the international vendors as well. Do you reckon the mix to largely stay constant, or could it vary?
I think mix will largely be the constant. I think around 25% business is coming from overseas and around 72% is India. Now, what we see as far as India is concerned, India definitely has some export orders also. But as of now, we do not see any disruption in any business. So maybe going forward, we find that the same mix will happen. Maybe over a period of time, given a strong order backlog, we find that maybe our O&M should definitely improve. And if you look at our order intake of the first half, I think primarily the major contribution has come from the industrial segment. So going forward, we definitely feel that even industrial, if I look at segment-wise, maybe today municipal is around much 75%, industrial is around 25%. But going forward, I find that industrial will improve. And also, when we are able to, we may be able to improve our overseas exports, given the nature of backlog currently we have.
Okay, interesting. Before I come to margins, just one question. The world, Mr. Chopra, wants to, and even if some industries or some companies may not be necessarily wanting to, they want to talk about moving green, moving energy conservation, moving ESG, water conservation, etc. Do you reckon there could be increased spends from same clients and maybe newer clients coming to the fore simply because all these companies and all the industries collectively have to show this will to move towards being more green and being more efficient?
I think a very good question, Neeraj. We are, if you look at our Wabag logo and the tagline says sustainable solutions for a better life. And this is, maybe in place for several decades before we started talking about ESG and sustainable development goals. So we definitely find that there is an increased trend. If you look at Indian market itself, the kind of announcements which are there, where India is committed to water and sanitation for all by 2030 as per SDG 6. Historically, we have never seen that kind of a spend. And as far as Wabag is concerned, we have always been a front runner being a water technology company. So we have demonstrated that we can build power neutral sewage treatment plants. When I say sewage treatment plants, which are power neutral, means whatever is a captive energy required, we use the biogas which is coming out of it to generate energy. They have been in existence in India for last 15 years. Now we have moved a step forward. We are trying to recover other ingredients of our sewage. So we are trying to convert sludge into manure. There are some projects which are already under implementation. And water recycle and reuse is a big market today. So all three things will be used. Last year we inaugurated a plant in Chennai, which is 45 million liters per day, where treated wastewater is recycled and supplied to industries. And even the government is contemplating using all this water, if 100% not for industries and agriculture put together. So we find that there is going to be a huge potential for this ESG compliance. Even in the industries, they have gone for zero liquid discharge, and we have already some very strong references on zero liquid discharge.
Yeah.
So in all aspects, as far as sustainability efforts are concerned globally, we find that both in the industrial and municipal segment, there is going to be much more scope and much more intervention of technology, where Wabag will definitely have an edge over the competition.
You believe hockey stick effect, or is that too much to ask for in these times?
Yeah, somewhat.
FY23 onwards, or is it difficult to predict?
I think FY23 onwards, it will definitely have a much the traction which will be seen in the emerging markets because of the inflow of funds which are going to come from developed nations, from multilaterals, and even the outlay of the local governments. I feel that definitely it will have a much more impact for maybe starting from 23, at least for next 5 years. This is going to be the flavor.
Interesting. And it will probably show in order books, because same clients will order more or spend more, you will get a newer fold, etc., and all of that.
Absolutely.
Okay. One standout feature in a quarter which was marred by margin issues for most companies. In your case, both gross margins and EBITDA margins have expanded both QOQ, YOY. Now, it could also be a factor that Q1 you had faced immense cost pressures, but there's a reasonable bounce back, more than a reasonable bounce back. What led to this? And is this sustainable?
Yes, I think first I'll answer the later part of it. It is sustainable, and we are definitely targeting to improve it further. Now, if you see Q1, our margins and versus Q2, there's almost an improvement of 2%. Now, what happened is in the first half, one, definitely there was a pressure on the top line because of COVID issues. And secondly, there has been an immense pressure on the commodity prices like steel, cement. So wherever construction is part of the contract, that was also impacted. So what we have done is we have tied up with a lot of vendors. It's more like a cash and carry business for us. So we are getting all these commodities at whatever rate we have already agreed with them. So that's something which is helping us. The other is that there were a lot of small contractors. So we have renegotiated our terms to facilitate their cash flows, to speed up the So both these effects put together, gives us a confidence we will not only be able to retain, but maybe improve our margins by the end of the year.
Improvement of margins, Mr. Chopra, cannot be a factor of just commodity cost, right? Because they are so unpredictable. Are you also, and I just want to understand whether you are or not, getting some pricing power in the projects that you are working on simply because they are so critical to the going green missions of most industries?
I think definitely we have certain threshold levels beyond which if the margins go down, we don't even, we are not happy to even get those orders on board. But as I mentioned you, there are two aspects. One, our industrial and O&M is going to grow in the overall pie. So as far as industrial is concerned, in the overseas, one, we have definitely better margins. And secondly, our cash flows are much more comfortable in our overseas projects compared to India. So that is something which gives us a leeway. As far as O&M is concerned, it's not a top-line driven business, it's a bottom-line business. And if given the strong backlog we have, once that pie increases, I think this will be a effect of these two, which will come into play. Now, definitely today, once traction of most of the schemes which the government has announced, the tenders start coming out. I think there is enough for every player in the market to grab. So maybe I don't think there will be that intense a competition which will put additional pressure on the margins.
That's interesting. So you are saying the competitive intensity is not extremely heightened. I read that you started executing the Malaysian and the Russian projects. You're talking of, and arguably, if the math of the Nomura analyst is not wrong, H1 contributes 42%, H2 contributes 60 odd percent. So higher execution, higher sales, better margins. All of these lead you to believe, therefore, that the second half will be much better, both on the top line and the execution front, as well as on the operational front.
Yes.
Okay, great. Last couple of questions. Firstly, so you've done this, right, wherein you've deployed a lot of capital. There has been an increase in working capital in H1 as well. Transient, or you reckon that because of the heightened execution as well, there might be some pulls and pressures on the need for working capital, and how do you manage to counter that?
I think working capital, as you would have noticed and you mentioned also, we have already increased in the first half. We have deployed over 200 crores additional. And as I mentioned, it's primarily to tie up on the commodity prices and also to support some of our smaller contractors, which were badly impacted on that. Going forward, since our top line is going to increase, so I think in terms of working capital, the number of days, I think it should only come down. I don't foresee that it will go up. Maybe in terms of absolute number, there may not be a very drastic reduction. But in terms of number of days, it will definitely feel that it will be lesser than what it has been in the first half.
Got it. Mr. Chopra, one bookkeeping question, if you will, and I don't know if you can answer this, but I'm still asking you. As I look at the presentations, and please tell me if my numbers are slightly off, but I don't think they are. When I look at the order book breakup, right? EPC 65%, O&M 35%, municipal 75%, industrial 21%, India 76%, Europe 20%. Are you wanting to consciously change this? Forget on the industrial side, there I believe you are, but otherwise, are you wanting to consciously change this? For what reasons? And what could the outcome be 3 years out if you manage to achieve what you are intending to do on the order book breakup?
Definitely, first I will mention about the services business, which is O&M. Our long-term target from 3 to 5 years is that it should contribute at least 20 to 25% of the total revenue and order book. Order book is already more, but in terms of revenue, because these are long-term contracts, so the revenue churning out may not be that high. So we expect that 20 to 25% should come from O&M strategically. And also, since industry, there is, especially on the effluent treatment, as we mentioned about zero liquid discharge, that's going to be going forward a key thing. And Wabag being a very, very strong technological player, I feel that, that should, if I look at 25, if I look at the market potential, it is around 30% is industrial, 70% is municipal globally. So we feel that 30% at least should come, if not 35% from industrial, and balance will continue to come from municipal segment. So that will help us not only in our overall improvement of the margins, but also in terms of our cash flows, given the nature of contracts which are there in these kind of segments.
Okay. I have one final question, and it's something that we always talk about every quarter, so you'll excuse me for asking that again. But last quarter, you had said that you're waiting for the courts to resume before you figure out what happens to the receivables, right? From the two big things that are stuck. I mean, any thoughts, any updates, any updates?
So Neeraj, as you yourself mentioned, yes, courts are open, courts are started, the hearings are on. But once it is sub judice, obviously, given the Indian context, it's very difficult to predict the time frames. But we feel that things will move positively for us going forward. That's all I can say. Because since it's all sub judice, my constraint in commenting anything beyond that.
Nevertheless, well, so as long as the ghosts of, not ghosts really, but some issues of the past, in your confessed words, right? There were some issues that were happening in the past. You move beyond them. The future looks great. Just that bookkeeping front, if the past also resolves itself, it could be Sone Pe Suhaga, as they say. But I wish you all the best. Sorry, you wanted to make a point?
No, thank you so much.
Okay, I wish you all the best for the second half. Sal Mubarak to you, and stay safe, Mr. Chopra.
To you too, and thanks a lot.
A pleasure. As ours, viewers, thanks for tuning in.